Welcome to the Deep Dive. Today we've got a massive stack of data in front of us. It's the IEA's Global EV Outlook for 2025. And this thing is really a sprawling map of the world's huge shift towards electric cars. We're going to try and give you the coordinates, basically.
Yeah, exactly. Our mission today, for you listener, is really efficiency. We want to pull out the crucial stuff, not just the numbers, but the real trends, the geopolitical angles, the tech bottlenecks.
So you know where the EV market is actually headed, say, through 2030?
That's the goal.
Okay, let's start with the sheer momentum. Because the scale is, well, it's pretty staggering. This isn't niche anymore, is it?
Not at all. Globally, EV sales went past 17 million in 2024.
17 million.
Yeah, and that's a sales share of more than 20% of the entire passenger car market.
Wow.
And here's a stat that really jumped out, I think. The IEA calculated that the extra 3.5 million electric cars sold just in 2024. That number alone was more than the total number of electric cars sold worldwide only 4 years back in 2020.
That really puts the acceleration into perspective.
It does. The ramp-up is definitely real. But, and this is key, it's not happening everywhere at the same speed.
Yeah.
That's the geographical story we need to tackle first.
Okay, yeah, let's unpack that geographical divide because 2024, I mean, if there was one clear winner in speed and just market saturation, it had to be China, right?
Yeah.
What are the latest figures from there?
Oh, absolutely. China kept its, frankly, unbelievable lead. Electric cars made up almost nearly 50% of all the cars sold there in 2024.
Half. That's not just growth. That's like market capture.
It really is. And think about the knock-on effect of that.
Yeah.
1 out of every 10 cars driving on Chinese roads right now is electric.
Wow. So that must completely change the conversation over there about things like, consumer confidence or range anxiety, even infrastructure needs compared to elsewhere.
It creates a totally different market reality. Now, contrast that with the big Western markets in 2024. Europe, sales basically stagnated.
Stagnated after all that growth.
Yeah, they stayed stuck around that 20% sales share mark. And the United States, well, it saw slower growth, only up about 10% year on year.
Okay.
Reaching just over 1 in 10 cars sold for the year specifically. So, the slowdown in those key Western economies, partly because of maybe wavering policy support, maybe price premiums, it's really noticeable.
Right. But despite that stagnation in Europe and the slower growth in the U.S., the global forecast for 2025 is still pretty aggressive, isn't it? Does the IEA report sort of explain why they're so confident that slowdown won't hit the whole market?
They do, yeah. The projection is that global sales will actually go over 20 million this year.
20 million.
Which would be more than a quarter of all cars sold worldwide. And the reason, well, the answer really lies in emerging economies, places outside of China.
Ah, okay.
Sales in those markets are expected to grow really strongly, increasing by something like 50% just in 2025 to hit about 1 million vehicles.
So we're talking places like Southeast Asia, maybe Latin America, Africa, suddenly becoming these major growth areas.
Exactly.
And the report, I remember saying this, explicitly says a key driver is often those relatively affordable Chinese EV models.
That's right.
Which brings us neatly to, well, maybe the core conflict in the report, the price gap.
It really does synthesize down to what you could call the great affordability chasm. Let's use the specific data points. They really highlight it. In Germany, the average battery electric vehicle, or BEV, cost about 20% more than a conventional car.
Okay, 20% more.
And in the United States, that premium was even bigger. BEVs were 30% more expensive on average.
So if you're shopping for an EV in the West, basically you're still looking at a premium purchase.
Pretty much.
But then you look east. And what's fascinating is that in China, 2/3, 2 out of 3 electric cars sold in 2024 were actually priced lower than their gasoline equivalents.
Lower. And that's without even considering purchase incentives.
Right. So for the mass market there, price parity isn't just achieved, it's been blown past.
And that price difference, fundamentally, it comes down to manufacturing dominance. China is, well, undeniably the world's EV manufacturing hub. They're responsible for over 70% of global production.
70%. That's a huge number. That's the geopolitical headline, really.
It is. And that cost advantage they have, it's accelerating.
Absolutely. I saw the battery pack price data. The global average price fell more than 25% in 2024.
Yeah, the biggest drop since 2017.
But crucially, that price drop was fastest in China. right? Something like 30%.
Around 30%, yeah, compared to maybe only 10% to 15% drops in Europe and the United States.
So that competitive gap is actually getting wider.
Significantly wider.
Yeah.
And that accelerating cost advantage, well, it's not just good news for Chinese buyers, it's seen as a massive strategic threat by Western manufacturers. So when Western capitals see this cost difference widening so fast, the first reaction isn't just competition, it's protectionism.
That's the pivot point, isn't it? How are Western countries responding?
Well, primarily through trade restrictions. We've seen some key policy levers being pulled.
Like what?
Things like Brazil bringing back duties, the new U.S. 25% tariff on automobiles, the EU putting in place countervailing duties.
So basically, the West is trying to put up a protective shield.
Exactly. And those duties, they are instantly reshaping global trade patterns. You see Chinese exports shifting more and more towards markets that don't have those barriers up yet.
Okay, where are they going?
The most dramatic example is probably Mexico. It saw a just staggering 370% growth in Chinese EV imports in 2024.
370%.
Yeah, and strong growth into Southeast Asia as well.
Okay, let's shift gears a bit. Moving from the sort of geopolitical price challenge to the infrastructure side. Charging. Has it kept up with these exploding sales numbers?
Well, globally, public charging stations have doubled in just the past 2 years. They reach over 5 million worldwide.
5 million points, that sounds like a lot.
It is, but again, geography matters. China, just because of its sheer scale, holds about 65% of that global total.
65%. Okay.
Yeah. Now, while China and the EU have generally kept a pretty healthy ratio of chargers to vehicles, we are definitely seeing a density problem pop up in other key markets.
Such as?
In both the United States and the United Kingdom, the build-out of public chargers just did not keep pace with EV deployment in 2024.
Okay, so what does that actually mean for drivers, for you listening?
It means the number of electric vehicles trying to use each public charging point actually went up, which, just makes range anxiety worse.
Right. And if we connect that to longer trips, highway driving, the readiness levels look very different depending on where you are.
Very different. For instance, get this, over 3/4, more than 75% of all European highways now have a fast charging station at least every 50 kilometers.
Okay, that sounds pretty convenient for long hauls.
It is. Now compare that to the U.S. Less than half, under 50% of U.S. highways have that same level of fast charger coverage.
Less than half versus more than 3/4. That's a major difference. A hurdle for confidence on long trips, I imagine.
Definitely. Now let's also touch on the logistics sector. Heavy-duty vehicles, trucks. They're critical for decarbonizing transport, right?
Absolutely.
Global electric truck sales grew by nearly 80% globally in 2024.
80% growth. That's huge. Let me guess. China dominates.
Once again, yes. China accounted for over 80% of those electric truck sales.
So what's driving that huge commercial interest in electric trucks, especially there? Is it just policy or?
It's increasingly about the bottom line, the total cost of ownership, or TCO.
Right, the lifetime cost, buying it, fueling it, maintaining it.
Exactly. And the TCO of a battery electric heavy-duty truck is already lower than a diesel equivalent in China, at least in certain uses.
Already cheaper.
Driven mainly by lower energy costs there. That commercial viability, when it makes pure financial sense, that's the ultimate tipping point for businesses.
And is that TCO parity coming to the West too?
It is. The IEA expects BEV trucks to reach TCO parity with diesel for long-haul operations in Europe and the U.S. by 2030.
By 2030?
And importantly, they're expected to stay more cost-effective than hydrogen fuel cell trucks in that projected scenario.
Okay, interesting. So let's look towards that 2030 horizon. What are the final projections under the IEA's main scenario, the stated policies scenario, or STEP East? That's the one based on current policies, right?
That's right. STEP ES basically assumes today's committed rules and policy directions continue. Globally, under STEP ES, the EV sales share is set to go past 40% by 2030.
40% globally. But you mentioned policy shifts earlier. What about the U.S. specifically under this scenario?
Yes. The U.S. presents a dramatic policy shock in this latest outlook. The projected share of electric car sales in the U.S. is now only around 20% by 2030 based on today's policy direction.
Only 20%? Wait, wasn't it projected much higher just last year?
Much higher. Last year's projection under similar assumptions was over 50%. So yes, the new forecast is less than half what was expected previously.
That's a massive downward revision. That's a huge headline. What on earth caused the forecast to be slashed so drastically in just 1 year?
It's largely put down to proposed policy changes. Specifically, the report points to the implementation of Executive Order 12154,
Okay.
which was seen as a political signal for agencies to kind of ease off on regulatory pressure supporting EV adoption. That, paired with the potential repeal of key tax credits.
So policy uncertainty and these directional shifts, they really matter enormously when you're forecasting a huge transition like this.
Immensely. But
Yeah.
on a more positive note, perhaps, or at least a sign of market maturity,
Yeah.
the reliance on government subsidies seems to be waning. Government spending, things like purchase subsidies and tax incentives, accounted for less than 7% of total spending on electric cars globally in 2024.
Less than 7%. Wow, how does that compare to before?
It's down dramatically from 20% back in 2017.
So consumers are stepping up.
Consumers really stepped up. They spent a massive $560 billion on electric cars globally in 2024. The market is increasingly standing on its own 2 feet, financially speaking.
Okay, so finally, let's zoom out to the really big picture. Energy security, trade implications.
Right. The global fleet of electric cars, all those millions we talked about, displaced over 1 million barrels per day of oil consumption in 2024.
1 million barrels a day already.
And by 2030, under this step-test scenario, that's expected to reach over 5 million barrels per day.
5 million barrels a day. That's a huge chunk of oil demand potentially gone. A big step towards energy independence for a lot of countries.
It is, but, and this is the crucial but, it comes with a major supply chain risk we just cannot ignore.
Which is?
China. China produces nearly 80% of all the EV battery cells globally, and over 90% of the crucial anode active material needed for those batteries.
80% of cells, 90% of anode material. That geographical concentration of manufacturing and processing power is, well, that's the primary geopolitical worry going forward, isn't it?
Exactly. You're effectively swapping dependency on oil, often from politically volatile regions, for dependency on critical minerals and manufacturing capacity, heavily concentrated in one specific region.
Okay, so what does this all really boil down to for you, our listener? You're basically seeing these incredibly powerful, simultaneous forces at play. On one hand, unprecedented record-breaking market momentum, especially driven by price and scale in China.
Right.
And on the other hand, that momentum is running headlong into these geopolitical trade tensions and, frankly, policy whiplash in Western markets. The whole global map of who buys and builds EVs is being redrawn very quickly.
It really is. And the big picture takeaway is this. Transitioning to electric mobility, yes, it drastically cuts reliance on oil, but it absolutely creates new dependencies on critical minerals and dependencies on these highly concentrated manufacturing supply chains, mostly in Asia right now. So the critical question, the one for you to really chew on, is this. How will countries that don't have established battery manufacturing capacity balance that desire for rapid, affordable electrification?
Which consumers clearly want.
Exactly, with the urgent need for supply chain security by 2030. That fundamental trade-off, that tension between speed and security, that's what's going to define the next decade of transportation.
A fascinating and, critical trade-off indeed. Thank you for joining us for the deep dive. If you enjoyed this deep dive and found it helpful, please do consider supporting the show with a donation at buymecoffee.com/CalPerniNews.
Every contribution really helps us create this kind of content and share these insights.
And don't forget to follow the channel so you won't miss future deep dives. Thank you so much to all our listeners.